Dear viewers, we all know that at the end of the day, the main motive of starting a business is to earn profits. And as an accounting students, we have to be clear about one thing, that accounting is a language of the business. At the end of the financial year, at the end of the accounting year, we have to prepare a profit and loss account and a balance sheet. We call them financial statements. We call them final accounts. And every business, as per the regulations of the Companies Act, erstwhile 1956 and nowadays 2013, and as per the regulations of the tax regulatory authorities, every business, every economic entity has to prepare their trading and profit and loss account and a balance sheet. In profit and loss account, it is an indicator of the financial performance of the business. Whether the business entity has earned profit or incurred loss during this financial year, because even investors are willing to know whether they have invested their money into the stocks of the company, into the shares of the company, or into the debentures issued by the company. They need to know that we are investing our money into the company, how this company is going, how the financial parameters of this company are, how is the wealth generated by this company. For that, the companies have to prepare the profit and loss account and a balance sheet. Now, by trading and profit and loss account, we first try to calculate the gross profit. Then the ultimate aim is to calculate the net profit. Net profit is the profit on which is to be distributable among the shareholders, from which the tax is to be deducted by the government, by the exchequer. Now, what is the principle of trading and a profit and loss account? It is nominal in nature. That is, we only show revenue receipts and revenue expenditures in this, both operating as well as non-operating, both direct expenses as well as indirect expenses. And at the end of the day, we calculate the net profit, and that net profit is then transferred to the balance sheet. And balance sheet that reveals about the financial position of a business concern. That's why balance sheet is also known as position statement. By balance sheet, we tend to know on that date what is the position of the business, financial position of the business, what is the makeup of the assets and liabilities, what is the investment of the business in the fixed assets, what is the composition of the current assets, what are the different types of liabilities, the obligations, in which we have internal liability, that is the capital, and every year we add the profit, which is undistributable profit in the form of reserves. We add that to the capital. If there is loss, the capital will obviously get eroded. And then we show other liabilities. We have current liabilities, which are to be repayable within one financial year out of the money generated from current assets. We also show long-term liabilities like debentures, like term loans, like cash credits. We also show other current liabilities like bank overdraft. We have the obligations which are payable to the creditors, those are shown in the balance sheet. And on asset side, we show the fixed assets, both tangible as well as intangible assets. We show the current assets. And this balance sheet is studied, and whenever we have to do the financial analysis, we take the data from the profit and loss account. We take the data from the financial statements, both profit and loss account as well as balance sheet, and then we subject that to rigorous testing using the financial statement analysis techniques, be it trend analysis, be it common size statements, be it comparative statements, be it ratio analysis. For analysis, even we have to make trading and profit and loss account. And the difference between the both is that trading and profit and loss account tells you about the financial indicator, financial soundness, like whether the company financial performance, we can correctly say whether the business has earned profit or incurred loss. And your balance sheet that tells you about the financial soundness, the position, the mix of various assets and liabilities. So that's all from me. Thank you so much.